This episode is proudly sponsored by Mortgages Montreal. For all your mortgage needs, reach out to Louis Vouloumanos and his dedicated team. They're ready to provide expert guidance and help you make informed decisions.
Hello, everyone, and welcome to another episode of Stellanides United podcast. Today, I'm absolutely thrilled, as you all know, that the Stellanides United podcast is one that empowers and inspires women. I also like to extend the reach. I like to extend the reach to everyone. A podcast that is going to impact and influence not only women, but men as well. And today I have such a special guest that's near and dear to my heart, as are all my guests. Louis Vouloumanos. Louis, thank you for joining the podcast today.
Pleasure, Stella. Pleasure to be here with you.
It's such an honor, and I have to give everyone listening and hearing us, watching us on YouTube and listening to us on all the other platforms, a little bit of background. So I've known Louis over 20 years, I would say. Back when I began my banking career in one of the five major chartered Canadian banks. We're not going to mention which one, but it was quite a big one. And I met Louis, and I saw Louis move up along his journey and his career path at TD. And I just knew, just watching him and just how charismatic he was and how savvy he was and knowledgeable and how exceptional he was in terms of his client experience, I knew he was destined for greatness. And I am so extremely proud of you, Louis. You cannot even imagine for what you've built and how you represent our community, our Greek community in Montreal, but also all the customers that you serve with all, from all ethnicities and backgrounds. So congratulations for the tremendous success, the tremendous company that you have built. And I want to be hearing more about your Montreal mortgages. And actually, you know what? Let's start with that. Let's talk a little bit about your company. But before we do, I think a very important question, we'll touch upon the tariffs because, this podcast is going to live forever. So we'll talk about the tariffs today, but probably the tariffs may or may not be relevant in 2 or 3 or 5 years times from now. But it is going to be relevant for the viewers that are going to be listening to it within the next couple of weeks. So we're going to be addressing that. But Louis, the very first thing I would love for you to talk to us about is, what is the difference between you, a mortgage broker, and myself walking into a bank and dealing with someone, a representative, let's say, or a mortgage specialist from a bank A, for example, that can service me as well and provide me with a mortgage. So what's the difference between the two?
A very, very simple thing, Stella. So mortgage broker and mortgage specialist. What's the difference? Mortgage specialist represents one banner, one bank, or one institution, if you will. Okay, so could be working at Scotiabank or TD or RBC or whatever. So they only have access to one lender. A mortgage broker has to have a license, a special license with the AMF, which is the Autorité des Marchés Financiers, which allows you to then have access to multiple lenders. So you're no longer representing
a whole spectrum.
Yes, you're no longer representing one bank only. You're able to submit deals to multiple different lenders, like banks, virtual lenders. Virtual lenders are like First National or Lendwise or some of the ones you see online.
Sure.
And you will also have access to alternative lenders, which are formerly known as B lenders, which are more for like self-employed individuals, bad credit, or
more of the difficult files to get approved, I would say.
Yes, more difficult or self-employed. Some people are self-employed, they have really good credit, but they don't declare the traditional income like on the notice of assessment. Right. So we use a different way to qualify them. So they're not necessarily more difficult. It's just a different way to look at a file,
Okay.
So that's pretty much it. So you have to be licensed. You have access to different lenders because of that license. And there's courses to do every year. They call them UFC units. You have to make sure your education's on point. You have a specific amount of units of education you have to do every year to keep your license and all that stuff, right? So
Continuing
that's the
education.
difference.
Okay. And we all know that often, more than not, that when you walk into a bank, a lot of times, you're greeted by someone junior, someone that's been there, if you're on the roll for 6 months, you're considered a veteran at the bank
Yeah.
nowadays, right? And oftentimes, a couple would walk in or an individual, and I don't want to, I'm generalizing here. I'm not being specific, bank specific, but it's quite difficult to get your approval, let's say, immediately, or get the rate that you want immediately. You're always at the mercy at the individual that's servicing you. And as I mentioned, a lot of times individuals are junior and just starting out and don't have the extensive experience, someone like yourself, Louis, to get the mortgage approved and also to get the best rate possible. Now, I want to talk about the best rate, interest rates. I mean, this is, obviously anyone who has a mortgage would love to know that they're being serviced and getting the experience of having the best interest rate possible. I know you're a very humble individual, so if you can, I know you have a lot of pull, right, with a lot of the institutions that you deal with, a lot of the banks that you deal with. And the rationale behind that, and if you're comfortable sharing the numbers, you can. If you don't want to, you don't have to. But I know you're just a very humble individual in general. And I have to tell the audience and listeners that the more mortgages you do, the higher the magnitude of mortgages that you actually approve and service, obviously the better interest rates that the banks would potentially probably provide you as a mortgage broker. Is that correct, Louis?
Well, basically, the banks have their threshold of. Are we talking about rates now, Stella? Like
Yeah, in terms
specifically,
of
or
in
yeah,
terms of the fact that, so the size of your business, right? So, and the number of
yeah.
X amount of mortgages that you do per year. So the more mortgages that you do, obviously, I know when I was working at one specific bank, they said, "Oh, Louis Vouloumanos, he's a star, he's great, he's fantastic with his clients." And it's almost they treat you like, you're on a golden platter because you provide the banks with so much business. So my question to you is that if I come to you as a new client, what is a probability of me getting a better rate or a very, very competitive rate vis-a-vis if I didn't come to you, for example?
The first thing I'm gonna do, Stella, is I'm gonna ask the right questions. Like, what are we doing? Because some
Okay.
people, I can give sometimes I'll offer the best rate, but that's not the right product. So I'll give you an example. If somebody tells
Right.
me what's your best rate, I can say, well, for today, I'll give you an example. I'll say 419, for example.
Okay.
But that's a 5-year fixed. And if the person's not sure if they're going to be selling that property in the next 2 or 3 years,
It's not the
or
right
they're
product.
they're uncertain of the future of this property. So some people buy a property, say, I don't know, I might be upgrading in a couple of years. Just
Mhm.
going to buy this for now, and I'm looking to upgrade, so I'm not sure what I'm going to do. So I'm gonna typically say, listen, you don't want to lock yourself in with on a 5-year term. It could be a big problem for you. You might have a huge penalty to pay. You might want to look at a variable rate or a shorter term
Correct.
2 or 3 year fixed. The rate might be higher. So there's rates going in and there's rates going out. So what we really focus on, and every broker has to do that,
So what do
is
you mean by rates going in and rates going out?
so yeah, meaning if you're going in at 419 but going out and you're paying $20,000 penalty, that rate is not good for you. But if you're
Correct.
going in, I'm just giving you numbers. Like that doesn't necessarily mean that's
Even
the
if
best
that
rate for you.
rate would probably been the best rate at the time, right? And so
Yes,
you're talking about the
that's right.
product not being fit to the customer.
That's right. If I tell you, well, listen, I'll give you 20 basis points higher at 439. However, you're out in 2 years with no penalty, and you can decide then what you want to do. That's why the conversation has to be more than just rate, because
Right.
the issue in the past has been that education in terms of what's out there. What are we providing here? We're not just providing a rate where it's a whole spectrum of stuff we need to ask specifically what's right for you. How long will you be in this
Yeah.
property? These are questions that are very important, obviously, right? So
Yes.
we want to look at the rate going in. And
Yes.
what is the rate going on? Like, how long will you be in this property? That's one of the main questions that we need to ask as brokers. So, in terms of rate, now, if we're just talking about
That's an
interest rate,
excellent point, by the way.
yeah. So we're just talking about interest rate. If we're shopping for rates, like let's assume now that it's just a rate conversation. We're looking at a 5-year term and we're just negotiating on rate and whatever. Obviously, when you have a lot of lenders, access to lenders like me,
Yes.
they all change. Like for Scotia might be really competitive during this time of year. CIBC might be really competitive during another time of year. The good thing about us is like when they shift on their time where they're really
You
competitive,
see it.
we shift with them. So we're not stuck. The issue with being a mortgage specialist, which I was for 10 years, great 10 years, by the way,
Yes.
uh, is that the market changes, everything changes. And in today's market, I think being a broker has a lot more advantages. Previously, the banks were very different. It wasn't priced the same way. Rules and regulations didn't change as much.
I agree.
I think as
And the
time goes
staff were
on,
more experienced as well.
experience, yeah, of course, experience is one thing, right? So it's all about environmental changes. Like when we see an over-regulated market like today, like the brokers are very, very regulated. So are the specialists and the banks. There's a lot of
Yes.
regulation around it. That's why I keep emphasizing on these questions because previously there was not much regulation and people would just throw clients into whatever rate and there was a whole bunch of issues. Clients were uneducated, unaware of what they're signing. They would just
Yeah.
sign the best rate. So if you go to like some banks, I'll give you an example. They still have this today. They'll give you a very restricted product on a 5-year term, and you're going to sign that, be very happy with the rate, but you don't know that you can't refinance for 5 years.
That's
You can
right.
only sell. So you have to be very, very careful. The broker's job is to educate the customer on what they're signing, because if they don't, you can actually go back and say, "Well, I was not uh, presented the right product. We never had the right conversation." And guess what? Brokers like me have to have a summary of the conversation with the customer
Okay.
to protect the client. That's why the AMF exists, because they want to protect the customer against an uneducated decision for them on what
That's
we
right.
put them in what product. So
A
it's not
decision
like
that's misinformed and
misinformation. Yeah,
or being taken advantage of as a client. Okay, that
well, yeah, it could be that too, right? So and sometimes here's the other thing. Sometimes the clients are wrong. Sometimes you tell them and they just don't listen, or they just want the best rate. And now what's important for the brokers is, well, hold on a second. If
yes.
you're choosing the product that I don't recommend you take, I'm gonna have to document it myself and have something in writing that I advised you not to
Protect
take that.
yourself.
Of
Exactly.
course, yeah, of course. So I urge my team always, guys, whatever decision is made, if it's something that doesn't make sense, put it in writing, make the customer acknowledge that they want
Yeah.
this on their own.
That this is what,
And
these are
yeah,
this is the plethora of options or the right option. These are a couple of options that fit your needs. Or
yeah,
you didn't want to go with them, you wanted to go with this. Because obviously, you know how people are, Louis, right? They talk to many people before they make a decision. And oftentimes that's the problem, that they talk to too many people, they get confused, and then they make an erroneous decision, one that's
yeah,
not well informed, right?
that's true.
I love the fact that, the mortgage brokers, similar to yourself, cover, multiple institutions. And like you said, you shift with the rates. And I also love the fact that you say it's not just a rate conversation, right? So you literally do an analysis. So walk us through, a day in the life of a typical customer that comes to see Louis Vouloumanos and his team at, Mortgages Montreal. What does that look like in terms of a self-discovery meeting?
It starts with a phone call, either a referral from a broker, like a real estate broker that tells us call this customer, or a client that gives the client our number and they call us. So the first question I ask is, what are we doing? There's three things that a customer is going to call me for: a purchase, a refinance, or a pre-approval. So I got to start with those questions. What are we doing here?
Correct.
Second thing is, who's on the deal? How many people? Husband, wife, maybe a brother and a sister, maybe 5 people buying an investment pro,
Sure.
whatever. And then there's, okay, what does everybody do for work? And how many properties does everybody own? So if I have 5 people with 5 properties, I need 25 mortgage statements to do this deal. If I
That's
have
right.
two people with zero properties, I just need their income and that's it. That's what I'm going to ask
Because
them.
you're assessing the income versus the expenses and all these ratios, if they're able to,
Yeah, well,
be as technical as we can, but just to make things simple, like you want to make sure that they're able to afford the mortgages and or possibly add more people on the mortgage if need be.
yeah. Once we get to those few questions, then I get into the ratios and all that stuff.
Yes.
When I receive documentation, then it goes to the team. The team, because I'm not the one who puts the deals on the system anymore. I don't triage the paperwork, meaning like get the
Yeah.
file to put that file together and all that stuff. I don't do any of that anymore. The team does it, but my team is really like very well trained. They're veterans at this point. They've
So,
been
so
with me
stop
forever.
right there. Stop
Yes,
right
yes.
there. Okay. Because
Yeah,
I want to ask
yeah,
again, you're being humble and you didn't answer the question that I asked you in the beginning.
yeah.
I'm gonna
Which
have to
one?
circle back to it because I'm tenacious and I know you and
Yeah.
I'm so proud of you and I want the world. There's going to be thousands and millions of people watching this podcast. And again, all with the intent of providing educational information to both women and men in our communities and abroad, right? So Louis, you say you no longer do this, you have your team. Are you comfortable in saying how many mortgages in a year you fund? If you are, great. If not, we can just, you know,
Yeah,
uh,
no, I have no problem with that. We do over 400 mortgages a year here at the office. That's my team. Okay, I have
that's
four.
significant. Wow.
Yeah, thank you. I have four direct underwriters that do like team
Yeah.
members that set up the deals on the system. We deal with at least the 10 different lending institutions, our main ones, I would say. We have more than 10, but we stick to those 10.
Yeah.
They know us, we know them, and it's just a more of an easy, smoother transition, right?
See,
To
so
get the
that's what
file
I
done.
want. That's what I was
Yeah.
alluding to in the beginning. The fact that you deal with, let's say, I'm, I'm just going to guess here. Let's say 7 to 8 institutions plus the virtual lenders, etc. The fact that you work with the same ones over and over, they know the type of deals that you're going to be bringing forward to them. They know the accuracy that's going to be submitted to them and then hence the easiness, the ease behind, working
Yeah.
with Louis Vouloumanos and his team at Mortgages Montreal, um, and also the quickness in getting your mortgage approved and being certain that they're going to be, again, I love the fact that you said, so let's not just look at the interest rate. Unfortunately, a lot of people just focus on the interest rates, but it's also the types of products that we need to look at to make sure that the
I would
right
say
product
that
is
that's
given.
more that's even more important than the rate. The product is it's
The product,
so
yes.
important because if you look at in Quebec, the studies are shown that people don't make the 5-year term. The average breaking of a mortgage is between 3 to 3.5 years.
So what do you mean by the average breaking?
Meaning most people, I think over 60% or something like that, don't even make it to the 5-year term. Separations is
Yeah.
one of them. Refinances is another them. I'm full of debt. All these things happen. I need $50,000, right? We know, especially today with inflation, I
Yes.
can guarantee anybody watching this right now is going to say I have debt
Yes.
because it's life has gotten so expensive. And the common man, it's very hard for you to be above water. You walk out
Yeah.
of your house, you go to Walmart, you're going to spend $100 just for random items, right?
It's
So
crazy. I know
it's gotten
inflation,
it's
it's
gotten crazy. So if you're watching this and you're in debt and you feel bad, I would say you're not alone. There's a lot of people in the same boat, and I wouldn't even blame yourself at this point because I think it's almost impossible not to be in debt today because of rising prices. Inflation has completely killed us, right?
so you're
So
saying, Louis, so that
yes,
you make such valid points, right? And I think a lot of the people that are going to be listening are going to, these are what I call aha moments, right? So a lot of it's like, oh, aha, like I didn't know that, right? So 3 year term, is this something that you see that you recommend? Let's say if someone says, I really want to fix, my marriage is solid, whatever the case may be, I don't foresee selling. Is the 3 year, like, what are the popular terms that you see? 3 years, is it a variable? What's the most
right now
popular
the
thing that you
last
see?
year I would say the last year, we've been selling a lot of the 3-year term.
The three
And
year.
the reason, and there's not only the fact that most people don't make the 5-year term, it's the fact that people think that the rates are going to drop a lot. So now that I think this
Okay.
is our next question at some point, right? Rates. So
Yes.
because we think
Go
rates will
ahead.
drop,
Yeah.
somebody locking in their rate in the last year is going to say, I don't want to do a 5-year term because right now rates are in the mid fours, let's say. But
Hmm.
last year they were in the 5 to
That's right.
5.5%,
That's
Stella.
right.
So
That's right.
if they were at 5 point to 5.5%, no one wants to lock that in for 5 years. And we're assuming rates were going to come down, and they did. So we are here now. And now with this new government in place in the US
Hmm.
and potential new government here in Canada, we're going to look to stimulate the economy where it's a
Yes.
different government, a different mindset, where the last one we printed a lot of money, inflation came in, and then rates had to go up because we had to control inflation.
That's
Now it's going
right.
to be a different government that's going to want to stimulate the economy, and maybe we will get inflation again. So
Yeah.
it's possible that we see in the next 6 to 12 months rates coming down. I want to say emphasize on the word possible because
Possible.
we don't
Yes.
know what's going to happen.
Well, they
And
just went down by 25 basis points in Canada, right?
yeah, they went down last the variable rates went down, the
Yeah.
prime rates, right?
Yeah.
Went down. The fixed rates did not follow that time. And they don't necessarily always follow each other
Oh, that's an
because
important thing for everyone
yeah.
to, okay.
So they're actually linked to two different things. Fixed rates are linked to the bond rates, and variable rate is linked to the government overnight lending rate. So it's a different thing. So rates come down, our we know our phone's gonna start ringing. Hey, fix my rate again, and it came down by a quarter. No, it doesn't work that way. If you had a fixed rate, if you
Hmm.
have a variable, it's automatic. It just comes down on its own and goes up on its own.
That's right.
So, so now, if you look, if the question, I think one of the questions we had
Yes.
was where are rates going to go, right, Stella?
Yeah, I mean, where are rates gonna go? What's your intuition? So, because we have this, so right now currently, February 4th, 2024, 2025. Oh, wow, okay. So there 2024, 2025. We know that, President Donald Trump imposed a 25 percent
Tariff.
tariff increase hike, and it's panic across
Yeah.
the board. There now we have a postponement of 30 days grace period. Let's hopefully the new government will come into play and have some renegotiation
Hmm?
and have some smart talks
Yeah.
and smart negotiations, and because we're dealing with the biggest, the most powerful country in the world, the US, right? So we're
Yeah.
literally at their mercy. We can, you know, um, try to see if we're going to increase all these tariffs and counteract them. But is that the right necessarily thing to do? Look, I'm not a politician. I know it's not the right thing to do. We need to negotiate, right? But having said that, with all this, uncertainty, the tariffs going up, they're stalling, they're pausing. There's a lot of people talking and conversations. Have you received calls, Louis, recently with regards to this effect? And, how is my mortgage impacted, etc.? And again, of course, it all depends on the type of mortgage that they're holding. But specifically for the variable rate or the shorter term mortgage, the 1 year, the 2 years, what kind of calls are you receiving and how are people reacting? And what is your, forecast if you had a crystal ball in front of you?
I didn't get any calls, to be honest, when it comes to the tariff situation.
Okay.
Okay, because I don't know if I'm like people think of me as the person to call for something like this. I'm sure that the questions are what's going to happen to the
Yeah.
economy, what's going to happen to
Yeah.
my job, and all these things, right? But I personally, this is my opinion again. I want to emphasize that part. Don't
So hold
think these
on. Can
tariffs
I
will
just
take
say
place.
something? Let me
Yeah.
say something.
Yes.
So the
Please.
fact that people
Yeah.
are not, if you're that your phone is not ringing off the hook, it means that your
Yeah.
clients are not panicking. And that's a true testament to the products and recommendations that you're offering your customers, and your customers are confident. I'm dealing with Mortgages Montreal. I'm dealing with Louis Elias, as we say in Greek, Vouloumanos,
Mhm.
and I'm extremely happy with him. Because could you imagine if you were inundated with 1,000 calls? It's because people were not comfortable with the recommendation that you had given them in the beginning. So kudos to you. That's a testament of your brilliance. Yet once again, Louis. Continue. I cut you off. I'm sorry.
Yeah, so I'm very involved with the conversation piece. Like that's the part where you're going to see
Yes.
me involved with the customer when it comes to the conversation, that part, because I want
Yes.
that to be very, very, very clear. I don't want to have any um, misunderstandings. You know
That's
what I
right.
mean? So that part, I'm always the one in contact, because then the back part, the file putting together, all that stuff, submission to lender, that's not me. That's the team that takes over. So and honestly, I've never had a complaint for product, and I don't have that problem because of the conversations, and it's important for us too, because
Yes.
like I tell you, Stella, we're
100%.
regulated, so it's
Yes.
not it's even though it's part of my process, makes me feel good. It's required for me to do that by the AMF. Um, so we have to understand that those things were put in place to protect
The
the
consumer.
public, and this is yeah, the consumer, right? And this is part of our job, and it's part of, you treat people how you want to be treated. At the end of the day, we don't want to put them in products they don't want to be in. Like in the last 3 years,
Yeah.
we put the clients in 3-year terms. This is what they wanted. I don't. For anybody watching this, the brokers get paid less smaller the term is, and
Right.
for us, it's like I don't care what the commission
You
part is,
want to do
because
what's right for the
at the end
client.
of the day, that customer is going to come back.
That's right.
Yeah, the machine keeps rolling, right? If
Yeah.
you think of every time you want to make one pop of a customer, it doesn't. It's not a long-term thing. It doesn't work out. So the positive feelings and all that stuff, and doing the right thing for the customer,
Hmm.
I think in the long term is going to last in any business, right? And
I
if you look
agree.
at any business, once you're customer oriented, excuse me, it always works out for you. And if you're not, it doesn't, or you lose
That's right.
clients or whatever.
That's right.
So
And I recently
now,
saw you did a
yeah,
little you did a quick clip on your social media, and you were talking about the customer experience, and also when, if and when you do get a complaint,
yeah,
right? And how it's so important to address it, and how you can turn a complaint into an opportunity, not only for you,
yeah,
but also maybe an opportunity that the customer might not have seen before. Can you talk to us a little bit about that,
yeah.
Lou, and how you
Yeah,
handle
it's happened to me.
yes,
It's happened to me a few times over the career. It's normal. You're going to get a complaint for
yes,
something at some point, right? If you're dealing with customers, there's something that's going to go wrong, right? We
that's
have
right.
my biggest year. I did 660 mortgages. I had a team of 6 assistants. Someone's going to make a mistake somewhere, right? It's
That's
just going to
right.
happen. So my thing is, okay, hold on. I want to deal with this the way I would want someone to deal with my problem. Meaning,
Right.
I'm going to
A
sit
hundred
down.
percent.
I'm going to listen. I'm not going to make excuses. If we're wrong, we're wrong. That's the last thing you want to do. Because I had team members in the past that would make excuses and argue with the customer. They would you're just escalating the
Your
tension now.
skin
You're like,
was
if the
probably like,
customer's right, they're right,
oh,
man.
you never argue with the customer.
Ah,
Your
it's
customer is always
but
right at the end of the day, right? And even if they're not
yeah,
100% right, you have to find a way
I
to
don't
make
know if they're
them
always right,
feel.
but I can tell you that most of the time they're right.
Yeah, most of the
So
time they're right. That's right. But
like
you still have to, even if they're not, yeah, okay. But
they've been
we'll leave
wrong
it at
once or
that. I think
twice.
we both understand each other there, yeah. And
Yeah, yeah, yeah. No, it's like most common sense people, Stella, like
yes.
if you have common sense, you could find common ground. If you're dealing with a crazy person, you're not gonna find common ground. So
No,
that you
no,
can't
no. I
have
mean,
them.
the loose
But
cannons, I mean, those
yeah,
are like, they exist. They're one-offs.
yeah,
But that's not the type of customer that you're gonna wanna, have in your portfolio,
yeah,
because they just don't understand, and they're stuck in their ways, and they're just, they don't understand, the process. And like you said,
yeah,
you're regulated and you do everything, the way it's supposed to be done.
yeah.
So having said that, Louis, I wanted to ask you, so coming to you, what kind of mortgages do you offer? What kind of products do you offer?
So if someone's coming to me for a purchase, right?
Yes.
Let's stick to the basic thing, a purchase. we have access to the regular banks like Scotia
Yes.
and
Hmm.
CIBC and those banks. And we also have access to virtual lenders, which
Yes.
is basically those are all banks that are just virtual. They're online,
Yeah.
okay? And they're called monoline. They only offer
Yes.
mortgages, okay? The difference with them is that they have really good products. For example, if you go to a bank and you take a 5-year term, okay, and you go to a virtual and you take a 5-year term, the penalty between those two are it's basically a quarter of the penalty if you break the mortgage. Let's assume I get a 5-year term and I
Yeah.
break it and I'm not buying another property. Because if you're buying another property, you could just
Right.
roll it over to the new one. Okay, but let's say I sell and I took a 5-year term with a virtual lender. There's two products. There's the restricted and the unrestricted product.
Okay.
The unrestricted product with a virtual lender, if your penalty at the bank would be 8,000, for example, in their case, it'd probably be around somewhere around 2,000.
Wow.
Yeah, so
That's
it's a
a big difference. So for
huge difference. Yeah.
everyone that did not know the difference, this is a big, big difference. So this is why, we're hosting podcasts of this nature to educate both women and men, to make better decisions and informed decisions. And Louis, I also, in terms of, and also I wanted to know, so a multi-unit residential, regular residential, rental properties, like how many units can you go up to finance? Can you elaborate a little bit more about that?
Yeah, so anything residential is between 1 to 4 units. That's the standard residential
Correct.
product, which is basically what all the residential guys do, like me and my team. So that's our bread and butter. That's our main focus.
Okay.
However, we do have a commercial specialist in the office, and my team, including the people that do the majority of my deals, can do a lot of multi-unit residential, which means
Yes.
anything 5 units residential and higher falls under the multi-unit residential product. We do those. We've done several of them. And we also have a commercial specialist in the office at Mortgages Montreal that came from a bank, and he does all the commercial stuff. So when people call us and they need residential stuff, multi-unit residential mortgages or commercial, we have the answer. Not only do we have the answer, I don't have guys that are just brokers. These are ex-bankers.
That's
They
right.
know how the products work.
Well, the
They've been around
credibility
that
is
banking
there. That's
environment.
right.
Yeah. So my key was to hire people with actual experience in the banking industry because it's very, very strong. Like I'm very grateful for my history, Stella, as I'm sure you are, right? We came
Yes.
from the banking
Yes.
space. We grew there. They taught us there.
The best
Yeah.
schooling is
Yeah.
from the banks. I mean,
It's great. Yeah.
hands down for
That's
me,
right.
I worked at three major banks, and the best schooling comes from the banking industry. That's according to my
Well,
experience.
yeah, I mean, of course, it's right in there, right? So for sure it's the best school. And at the end of the day, the only difference of the broker is you got to the point where the knowledge is so much and overabundant, and
Yes.
now you got to give it to the world. And
Yes.
you feel like the walls are kind of closing in when you amass all this experience and you're just working for one institution. It takes a little bit of guts to step out, like to
You
step out
have
and
a lot
become
of guts. Let me tell
a
you,
lot
you
of guts.
had
Yeah.
a lot of guts to step out on your own. And I
Yeah.
was watching your progress and then your moves every step of the way. And I kept saying, you're such a star. You're such a star. You're such a star. And you are such a star. And please, please accept the accolades because you deserve them, Louis. And there's nothing that makes me prouder, as if I was your mom, even though I'm not that old, but I feel like, I feel that's how much, you know, like pride I have when I hear your name, Louis Vouloumanos. So Louis, of course I know Louis. And I remember when you were a financial advisor in the bank. I remember when you were a small business advisor at the bank, right? I remember when you were a mortgage specialist, and you would every single year you would win the awards because you were persistent, you're tenacious. I just there's another little story I would have loved to share, but it's a little more private in between me and you. But I remember that was when you first started really gaining the traction as a mortgage specialist, and you saw exponential success. But all to say that yes, we know each other, and I'm so fond and proud of everything that you're doing. And this is why, I want people to hear your expertise. So your thought process, your the mindset that you have when it comes to gaining business from clients and then servicing these clients. It's like you said, it comes back to you, and it comes back to you because you provide that exceptional experience. What else, Louis, would you like to share with everyone that's watching and listening to us in terms of, what they need? So when we look at documentation, and of course, it's going to be different with every file depending on
Yeah.
the need, but what are the basics? If you go basic 101, what documentation are you looking for and is your team looking for in order to be able to process the loan? Like the
Well,
basics.
basically the income documents, right? Depending if you're self-employed, we'll need your notice of assessments for the
Okay.
last couple of years. If you're salaried, the T4s and the pay stubs and stuff like
Yes.
that. And the rest is all about properties, how many you own. We need mortgage statements and all that stuff.
Your investments as
Tax
well,
bills,
right? Your liquid
investments. Yeah,
investment.
if you're putting a down payment on the property, we're going to ask you for a copy of your savings to make sure the money's there. Yeah, I mean
What's the
it's
minimum? Okay, so I know the answers, but
you know the answer.
just for the audience, what's the minimum amount that an individual would need to put down to buy a regular home, let's say?
So it's 5%. 5% of the first 500,000. If you surpass the 500,000, it's 10% of the difference. For example, if you buy something at 600,000,
Mhm.
500,000, the first 500 is 25K, which is 5%. And
Correct.
the extra 100K is 10%. So 10 grand on the 100 grand and instead of five, and 25 grand, which is 5 grand for each other of the first 500. So it's 35,000 if you go to 600,000, and then 700,000 is 45,000, and so on and so forth.
And
So
what's
that's
the
the
minimum?
minimum today. Yeah,
What's the minimum? The minimum that you have to put in order, because that's an insured mortgage. Can you talk about
insured.
the difference between an insured and
Yeah.
non-insured?
So when you say insured, it's confusing to people. They think insured insurance of life insurance. It's not, that's not what it means. Insured
Perfect.
means,
Let's go. This is a
yeah,
podcast. This is education in nature. Let's go. I love the
yeah,
fact that you saw it and I looked at it in one lens, but you're seeing it from
yeah.
both lenses. I love it. Yes.
Well, yeah, the consumers aren't going to understand this language, right? So
Yes.
insured mortgage means it's insured with CMHC, which means default insurance. It doesn't protect you, it protects the bank. So if you put
Correct. Yeah.
20% down, the bank takes the risk of that mortgage. If you default, it's on them. They're the ones who take the loss. If you put less than 20% down, an insured mortgage, then the insurance, which is CMHC, which is actually us, our government, our dollar, our tax dollar,
Mhm.
insures that mortgage against default. If you default, then the
Yes.
bank's covered
Yes.
because they no longer took the risk on their own. The government, which is CMHC and some other entities that exist, are the ones taking the risk. So, and then that's called an insured mortgage. Anything less than 20% down is insured.
And there's an insurance premium that you have to pay on that, and it's
That's right.
taxable as well, correct?
Yeah, that's correct. So the insurance premium is added to the mortgage. So it's, let's say you put 5% down, they're
Mhm.
going to add 4% of your mortgage amount onto the mortgage. You got to pay that over the next 25 or 30 years.
Okay. What's the maximum amortization that currently exists?
It just went back up to 30. It was at 20. Well, it was always 30 for anything conventional, meaning 20% down. If you're going
Yes.
with straight with a bank, not insured, it was always 30. Now, insured, which was 25 years, just went back up to 30 again to
That's
allow
good
buyers
news.
to kind of like get back into
That's
the
good
market.
news.
And the
Yeah.
reason why, because of the rates, it went up so much, people were priced out, they weren't able to buy homes. The rates, the payments were higher, so they
Yeah.
needed to kind of do something for the consumer. Otherwise, nobody would buy.
So the insured, and then you said also just to clarify, so an insured mortgage means if you take life insurance, critical illness,
Yeah,
disability, depending on the supplier, that's something completely different. I don't know if you
that's
want to
right.
elaborate on that.
That's right.
I don't know if
Yeah.
you can, if you're allowed. I don't think you're allowed to, but that's insurance. If you again.
No, we actually have to offer that product
Okay,
to the customer as well. So when somebody gets a mortgage, we have to tell them, listen, you have access to life insurance and critical illness
correct.
because obviously today it's a big problem.
Mm,
Critical illness, especially
yeah,
50% cancer rate for men, 60 something for women. So definitely, if you
that's
don't have
huge.
insurance, it's disgusting. It's sad.
No, no, no.
So
Yeah.
anyway,
It's one of the best investments, having an insured mortgage than having
yeah.
a non-insured mortgage because
Yeah.
you
You want to
never
tell you about,
know.
I'll tell you about my first mortgage after when you're done. My first
Yeah,
mortgage
yeah.
ever. Go ahead. Go
Yeah,
ahead.
no, no, no. Actually,
You have
no,
to say.
this is it. This is why I wanted to, better clarify so that the
Yeah.
people listening are know, okay, what's the minimum I have to put down? What's the
Hmm.
maximum amortization? What's the difference between an insured mortgage, CMHC, Canada Mortgage and Housing Corporation, versus one that's, a 20% down and then it's not an insured mortgage. And also, just very quickly, the advantages with taking the longest amortization, Louis, is that let's say someone took that in the beginning, where there was a 25 at the time, let's say, or 30, let's say it was 30, and now they have, let's say, 15 years left under mortgage, but they have financial difficulty. So
Hmm.
talk to us about the ability of being able to extend back to the original amortization
Yeah.
amount to lessen the payments.
Yeah. I think most of the lenders, I would say, if you start at 30 years and you increase your payment because you're making more money, you're able to pay more. So
Yeah,
you start at 30 and you're like, okay, I want to pay an extra 500 a month. That's going to decrease your amortization to 20, let's assume, right? You say
correct.
15 years.
Yeah,
You can go back and say, well, look, I lost my job. I want to
yeah.
go back to my original amort. Most lenders have access to go back to the original amount of your mortgage.
And hence minimizing, decreasing the mortgage, your mortgage
Yeah,
payments.
decreasing the mortgage payments where it's manageable. They even have some relief programs that you could skip one or two mortgage payments,
That's
depending on this is
exactly my
again,
next
depends on the
question, the
lender.
relief. How many
Yeah.
mortgage payments? Two or three? I think it's three.
Usually it's between depending on the case, right? So
Right.
when you're in trouble, I think some of the banks are gonna help you out with between 1 to 3 payments, depending on the lender. And then after that, they gotta kind of put it all back together.
Okay.
But during COVID especially, we saw everybody skipping mortgage payments. The lines were going bananas. They couldn't
Yes.
get you couldn't get through for 3 days because everybody wanted to not make payments during COVID. And then they came out with these programs for us to have all this government money that we were receiving, right? So the COVID relief days were nuts. Some people skipped their payment for 6 months.
Yeah,
They
wow.
were paid, right?
It's not surprising, right, Louis? And
Yeah.
everyone suffered from during COVID, and people are continuing. They still have the lingering effects from COVID. There was a question I wanted to ask you in terms of you're getting me excited because I know you want to share your first mortgage, but there was a question I wanted to ask you. I think I might circle back to it
Yeah.
um, when I remember. Yeah, let's go to your first mortgage. I want to hear that story. I'm excited. I
I'm
want
gonna
to
make it
know more.
fast because it's a long story, but I'll make it short.
You
First mortgage,
This
I
is
don't know
your
what I'm
time.
doing.
This is
Pardon
your
me?
time. This is your time.
I don't want to bore people either. So
No,
my
people are
first
not, you're
mortgage,
not boring people. People
uh,
are, trust me, we're gonna get thousands of views on this because
yeah.
it's you. It's you. You're the star. And I know you're probably saying, oh, Stella, stop saying that. No, I'm not gonna stop because you know what? You always used to say, no, Stella, you're the star. I'm like, no, you're the star. And that's what, good leaders do, right? So when I was, a leader in the corporate world, I would never take credit, right? We never worked together like in the same team, but it's always been, to be able to say that, you know what, I'm successful because of my team. And this is also, I think, is a great testament to a leader, a very strong leader. And this is also what you're saying, right? So you're saying, Stella, I have a team. It's me. I do the negotiation. It's important for me to connect with the customer, but I also have a team. So kudos to you for also, hiring the right people, acknowledging that there's a need, right, for commercial needs, multi-unit residential needs, etc., and you're hiring the specialists that you need to hire, and you're giving them. And I see your posts, and you're constantly recognizing them. So good, Good on you, Louis. That you're the
Well,
star.
it's the truth, right? So I wouldn't be able to do it if I didn't mean it.
Yeah,
The truth is that I have a very, very strong team. Actually, unique in that sense. I don't know. It's God given to me all the time. Like I get these amazing people that come work with me. For sure, I'm
you
grateful for
deserve
them, and
it.
they're grateful for me. I do get very tough when it comes to or demanding, I should say, more
Yeah,
than tough when it comes to customer interactions.
good. You should.
Like I want you guys to understand you got to call the customer, always
That's
have
right.
because at the end of the day, that's what they remember, right? So and customers are human beings.
That's right.
We remember our interactions with whatever. If I go to Air Canada and someone treats me badly, I'm going to remember that.
That's
If
right.
if if I had a nice experience, I'm going to remember that too. It's the same thing for us, right?
I
And
remember my question, Louis. I
yeah,
remember my question.
go
This
ahead,
is
go
the
ahead,
this is the excitement of the
go
podcast.
ahead.
Okay, so let's say I finalize a mortgage with you, okay?
Yeah.
And obviously, when my mortgage comes due, I'm out, I want to renegotiate. I'm going to come back to you. I want you to be able to renegotiate the mortgage with me.
Yeah.
But if I have any questions, so let's say we sign today, you approve my mortgage, everything's done, okay,
Hmm.
I close with a 3-year term, and then or a 2-year term or whatever the case may be. And if I have a question a year down the line, do I call the bank, the provider, or do I call Louis and his team?
We want everybody to call us
Okay,
because we want the relationship and we want to provide the answers. And sometimes you'll call the bank if it's something like minor where I want to increase my mortgage payment by $100 a month. That obviously we can't do that. It's got to be done internally. You could do it
right.
by calling the 1-800 number or whatever. But it doesn't stop the customers from calling me or anybody from my team and asking that question. We
And
love
you
the
can call the
interaction
bank.
because you're thinking of us. That's my guy, that's my team, or it's part of it, right? Where there's a relationship built, and then every time there's a need for a mortgage, they're gonna come to us, and then your neighbor, you're gonna need to
Yeah.
your neighbor's looking for a mortgage guy. Oh, I go to my guy Louis or whoever, right? That's part of building your own brand. But for me, honestly, Stella, until this day, I've been doing this 15 years now.
Yes,
I love it, man. I enjoy it for it's
I
so
know you
much fun.
do.
I don't find like I work. I
It
enjoy every minute.
shows. It shows. It shows.
So
And you see, so my question
it's
was
like
important.
I can't believe I get paid for this.
I love it. I love it. So you
For
see, my
sure.
question was important, and it was in my mind. I'm like, okay,
Yeah.
I really would need to ask this question because it's important for people to
Yeah.
understand and clarify to them. And I love to hear about your first mortgage that you wanted to share.
Okay. You want that one? So what happened was George Fakotakis, which you know, was
Yes,
my branch manager. Okay. So he
yes,
threw me in there. I had to learn how to do mortgages. First mortgage, couple comes in, an old Turkish couple, very like close to 60 years old, barely speaking English. They have a mortgage. The place gets repossessed. It wasn't even in their name anymore. It got repossessed by the city because they didn't pay their school taxes for 2 years. So
wow.
they hadn't paid, I think, $1,000 for 2 years in a row. Place went up for auction. They lose the property. They come back to the branch now. My first mortgage. I'm like, I'm just. This is my first
And Louis, it's
interaction.
important for people to know that they have school taxes and
Municipal.
okay, please, that's very
Yeah,
important for everyone
pay them.
listening. Okay, because if they miss that,
Yeah, you got to pay them. So what happened was the bank the city repossessed auctioned off the property, so it went to the person that bought the property. Then they have to buy they have, I believe, a year to get it back from them.
yes.
Okay, they have to pay a premium plus all the penalties and whatever. Long story short, it took me 3 months of calling lawyers and doing stuff that I'm not
And
supposed to
this
do
was your
because
first mortgage.
my first mortgage, calling the
What
bank
what's Michael
department.
Takas doing?
George was like, it was his first time faced with something like this too, right? So anyway, long story short, we get the mortgage done. It cost the customer about $70,000. This is in 2006,
Yes,
okay, to get the mortgage back because of $2,000, for example. Anyway,
this is
I don't
crazy.
know why
This
the
is
bank didn't pay
crazy.
the school tax at the time. I don't know if it was like a miscommunication, but at the end of the day, you
Yeah.
can't blame the bank because it's your responsibility, whatever.
You have the
So
option to pay the school tax to pay the school and municipal through your mortgage payment, or
yeah,
if it's a conventional mortgage where you put the 20% down, then you
yeah.
have the option to pay separately. I don't know what happened there, but again, that's a very and for anyone, obviously, I don't the people that don't know, George Fakotakis was your branch manager at the
At the
time,
time, first branch manager.
your
Yes.
first branch manager. And I
No.
remember it was at the Jean Talon Curves branch.
Yeah.
And yeah,
George
so
George is a good
again,
manager. So
listen,
anyway, long story short, we give these people life
yes,
insurance and
yes,
critical illness at the end. We got it approved and we made them sign. Say, guys, you should take critical illness
yeah.
insurance. It's important, etc. It was a little expensive at the time because they were old, but they took it. And what winds up happening 3 months later? The woman gets breast cancer. Okay. She comes back to the branch, gets a breast. She removes one of her breasts. Okay. So she survived. Nothing wrong with her.
Yeah.
The mortgage went from 350,000 in 2006, which was a lot, to
Yes.
zero. It got paid off completely. So all that happened. This all happened in the span of like 6 months. Where getting back the house, refinancing it, they go to the notary. All of
Wow.
a sudden, she gets cancer. She does the claim. They have to pay her because
Yeah.
she. And I never. I didn't know that was a unique story. You got to understand. This is my first
It's
mortgage.
extremely unique. And in 6 months, it's as if like you
Yeah.
got a crash course,
Yeah.
you know, in 6 months, something that can take people 3 to 4 to 5 years and still not be able to master. But the fact that you were able to learn all that in such a short period of time, Louis, again, I'm going to go back to it's a testament of your tenacity, your
Yeah.
resilience, and
I
your
felt bad. I
brilliance.
wanted to help. I cared. That's what it was.
You,
I cared. And I stayed till the end. Yeah. And
yeah.
honestly, the only one I know now, a lot of people would have tapped out and said, "Okay, guys, I can't deal with it. This is not my problem here."
Yeah, they
But
would have passed it off to the BM or
well,
whatever.
nobody knew what to do really. Whenever we're faced with a situation like that, even my manager George
Yeah,
was never seen anything like that because it wasn't something that's common at all.
yeah.
Repossessed home for tax bills and us getting it back. It was just not something you would see ever.
You
Anyway,
cared.
and
You
that was
cared, Louis. You cared
like,
about
of course, I
yeah,
cared. They were
yeah,
nice people, and I felt horrible for them. Like
yeah.
seventy
You know,
thousand dollars for a
so
full
this
time
is, you know
farmer.
what, I
You
hope,
know?
listen, I don't have any more questions for you other than the fact that I think you've answered like, you know, a plethora of questions that a lot of people wanted to have answers to. And obviously when this podcast gets posted on all the major platforms,
Yeah,
you know, we're going to get the views, we're going to get the questions, we're going to get the comments, and you know, obviously there's going to be a lot of customers that are going to want to connect with you, Louis. So stay tuned for that. In the meantime, can you please provide, because you're also sponsoring this podcast, so thank you very much, but can you
yeah,
please provide your contact information? How
sure.
can people contact you, Louis,
Uh,
for their mortgages?
I don't know if can you see my phone number next to my name there? Is that going to be on the podcast
I
still?
see your beautiful face. I
Okay.
see the MM, but I don't
All
see
right.
no,
So
because it's no, it's
the
the
phone
screen
number,
won't allow it.
the phone number is 514-823-8546. That's
Oh,
my
yes, I
personal
see you.
line.
I see you. Do you just put it in, correct? Yes. And
Yeah.
we're gonna have it, of course, obviously in the ad in the beginning and at the end of the podcast. But
Yeah.
again, once again, the phone number is area code 514. So for long distance, you know, you can be a snowbird living 6 months in Florida, 6 months in Montreal, whatever the case may be. But it's, let's say, 1-514-823-8546. And that's Louis' direct number. And Louis, on your social media, what's your website also? The website.
www.mortgagesmontreal.ca. That's the
Okay.
website.
Fantastic.
But honestly, the easiest way to reach me is just by calling. Like
My
just a
calling.
simple way. Pick up the
Okay.
phone, give us a call, give me a call, leave a
Sure.
message, I'll call you back. Pretty good at answering calls. Um, I'm actually everybody gets called a call back the
Yeah.
same day.
Yeah.
So yeah, that's it.
Any final thoughts that you'd like to share with the people that are listening, whether it's a new home buyer, people that have multiple, you know, houses, flipping houses, you know, refinancing houses, new construction, that's something you deal with as well?
Yeah, we do it all.
Okay, that's
Yeah.
important because new construction, yeah. So let's, you know, anything else you'd like to share before we end the podcast, Louis?
Well, I want to share. the maybe a little bit of my story and how things were. I don't think I
Yes,
spoke about that at all, Stella. So I just want to
yes.
want to give a chance to people that maybe some young person that may be watching this and
Look
how
at
everything,
you. I'm giving
right?
you a big heart. Yay, I love that.
Like at the end of the day, like we all start as whatever we all start as someone's student when we get a job, right? Like when
How
I
old were you? How old were you? Let's start from there.
25, I straight out of university, right? It was my first job at the bank. I liked working at the bank. I liked working with the public. And for me, it was like I just got out of the restaurant business, which I personally hated,
Hmm.
like with a passion. I didn't want to do that anymore. So I did it because I was in school and I had to. But when I got into this job where I got to dress nice and it's a nice job. You're a
Yes.
banker. I really enjoyed the interactions for me, and I just kind of worked. Like at the end of the day, I just did my job. And
Yes.
the difference today with as I think and for people watching this now that you're young, difference between a superstar and a regular person is I'm literally just doing my job. If you write down what my job title is and what I'm supposed to be doing, that's all I'm doing. But the thing is, I'm doing it in a consistent manner, whether I'm feeling sad or whether I'm feeling sick or whether
Consistency.
I'm not in a good mood, I'm still going to do my job. The issue what we have to, I think we have today is, I'm not in a good mood today, or I'm not feeling well, I have a slight headache. All of a sudden, we find all
And
these
we have this,
excuses.
right, Louis? We have the constant scrolling of the phone,
Yeah,
the
well, I
new
do that too, but after
generation,
work, right? So,
right? No, 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 no. But I'm saying, of course. I mean, you're going to have the phone because you have to work. But I'm saying the generation that has the phone and they're scrolling and they're looking at Instagram or TikTok but they're not really focused on doing their job, right? I
yeah.
see, we see a lot of that,
The
but that's
simple
not,
tasks that
yeah.
succeed over the long term in a consistent manner.
Yes.
So my like it's funny because we went out with a team a couple of times and some of the guys are younger than me now. And they always tell me like we've had nights where we've had some fun, so
Yes.
I can wake up later if you know what I mean. But I'm always gonna be here at 8 o'clock. I don't care what I'm feeling like. So I'm gonna be at the office, and I'm just can be tired. I'm gonna be consistently at work,
Yes.
consistently doing my job. And I think what just like I tell the team, guys, me. I'm going to be at the office. The customers know the same thing. They know they're going to get a
Yes.
reply to my email and an answer to their phone call. And that's not really like such a magical thing, but in today's society, it
Yeah.
lacks. If you go to a Walmart or go to any convenience store
Yeah.
and see the way you're being interacted by a lot of these people today, it's like the laziness of being there. Hi, bonjour. You won't get any of that anymore. These
You will
mindless
not even
little
get a
things.
response a lot of time. And a lot of times what really upsets me and us, coming from the banking field, customer experience, and we were measured on the customer experience index and etc. and a plethora of
Yeah,
questions that went with it. But what upsets me is if I go into a store, I don't know, let's say a grocery store, for example, and I
yeah,
hear the cashiers chit-chatting and they're gossiping or whatever, and I leave there so frustrated. I'm like, they should be attentive towards me, right? And
yeah.
and then I leave there, and my husband's like, why does it upset you so much? But
Because you're not used to it.
because
Yeah.
exactly, so because he doesn't come from a banking field, he's in a different, well, similar profession, but whereas we see clients at the bank every single time, every single day, and
Hmm.
we're expected to provide exceptional customer experience, and then you're walking into a store and people are chit-chatting or they're ignoring you or they're laughing. It's just not acceptable, right? It's just not acceptable. So consistency, love that.
Yep.
What would be a second thing if you have that you'd like to share?
Never give up. There's going to be times of tough times in anybody's life, and
Yes.
nobody's immune to life. You're going to have
Yep.
very bad times, right?
Yep.
And very good times. And during the bad times is really when you need to rise to the occasion and just put one foot in front of the other. Because those times come for everybody. No one
Yes.
is going to get through life unscathed. There's no,
Yeah.
I just don't believe it. And I think what's made me my mind even stronger over the years is I know bad times are gonna happen. These happened, to
Yes.
me and just like anybody else. It's just the way it is. And no matter what, I will always get up and put one foot in front of the other. That's just
Good
all.
for
That's just the way I'm
you.
wired at this point. But I
Good
think
for
for
you.
anybody watching this, if you're young or old or whatever, you have bad time. A lot of people turn up into a little ball and get, life has gotten so hard, and you can't do that ever.
Self-pity. Self-pity. A lot of
Yes.
people have self-pity, right?
Or it's like they freeze, and it could happen to anybody. Like life gets very, very tough, and we have to understand that no matter what, we have to move forward, no matter
Yes.
what. And I was telling my daughters my daughter, the older one, because I talked to her a little bit more now about life because she can understand. And
She's also a little movie star. I see her
Alexia,
on your
yeah,
yes, on your little clips on social media.
yeah. So what I told her is because I was a good student, but I wasn't the best student. I was a good student though. When I
Yeah.
applied myself, I was getting I made honors roll and stuff like that. But I mean, honestly, I don't know how important that is to be honest. But I when I did apply myself, I did very well. So what I told my daughter is two things. I go, let me ask you something. What do you think would make me more proud? If you worked hard and got a okay grade, or if you didn't work hard and got a very good A grade? Which one do you think would make me more proud?
The first one.
Yes. And the reason why, Stella, is because when we're programmed to work hard, you may get an okay grade today, but tomorrow morning, because you're working hard, you're constantly working, you're gonna get a very good
Consistency.
grade. But
That's
the
right.
lazy person that's getting that good grade that got the one off, he got lucky or she got lucky,
Yeah.
you're not gonna get lucky tomorrow morning.
Right.
You can't get lucky all the time
Right.
like that.
Yeah.
So I would rather reward hard work than just a grade because it doesn't mean that the person, I think that the hardest working
Yeah.
person will always, always win in the long term.
Yeah.
I don't care how smart they are. The
And
harder
they don't
working
have to
person
have a
always
thousand
wins.
diplomas, right? So they don't have to have a
Yeah.
thousand diplomas. That's another thing, right? So, I mean, they can, and that's fantastic as well. But also, if someone applies themselves and works extremely hard, and
Yeah.
follows their passion, that can lead to a, a substantial amount of success as well.
Yeah.
So I so appreciate you and I appreciate your advice, Louis. And I have to tell the listeners and audience that he's multi-talented as well. So Louis actually plays the piano. He sent me a little recording of a Constantinos Argyros song, El Pida, and maybe I'll tag Constantinos Argyros on this podcast. And
Yeah.
yeah, it's just you blew my mind away because first of all, that's one of my favorite songs, but just seeing like is there anything like you can do? Like I mean, I know you play squash with my husband as well, the squash tennis, and
Yeah.
my husband's like, wow, I really like Louis. He's a really good guy, and he plays really well. I'm like, but is there
Well,
any?
your husband can attest that I suck at squash.
No,
So
no,
that's one
no,
thing
you
I'm not
don't
good at.
suck. If you're able to play with my husband to
I can
play,
play, but I'm really not good at that, man.
he's
He's
an
really good.
okay,
So
he's
that's one thing I
overly
can tell you
obsessed.
I'm not good at.
He's overly obsessed, right? He's an avid squash player. But if you were able to, play a game with him, you're good. So, yeah, and it's important. And before we end, I just, talk to us about the importance of balance in your life because you talked about that on one of your clips, and I
Yeah.
wanted to ask this during this podcast because balance is very important, right? I mean,
Yeah.
you work so hard, your consistency, you never give up. These are two very important traits that you have obviously clearly,
Yeah.
explained. But talk to us about that, the importance of
So,
being well balanced and what it means for your health and your overall well-being.
well, I can only kind of relate it to what I've experienced myself. So for 10 years, Stella, when I was doing all these crazy numbers at the bank, I was 5 years in a row number one in Canada. You know that. I broke the record.
I know that.
Yeah, okay.
I
I
know.
broke every record. I was the first person to ever break the all-time record there, and then I broke my own record 4 years later, like every single year.
I feel like
So
crying. I feel like but these are
so
tears are these are like I'm being emotional because again, I'm proud of you, right?
thanks, Stella. But honestly, those years, I can tell you right now, even though it's a nice testament to my
Yes.
life, and I can look back and say, wow, I did this
Yes.
crazy thing. I would have never imagined I've done it myself. I don't even know how I did it now looking back, because I worked literally 80-hour weeks, 7 days a week for 10 years. So, and
Wow.
when I tell you I worked 7 days a week for 10 years, I
I
worked seven
believe
days a
you.
week for 10 years.
Yeah.
And my wife put up with that. It was very tough on both of us. We were raising kids. I had a career in mind. I'm just trying to get myself out of like I wanted to
Yeah,
put my life in a different place, make
yeah,
X amount of
of
money, do all
course.
these things. But after a while, you got
It
to look back
catches
and
up
say,
to
wait a
you.
minute, I've done all this now, and it's time. It's you got to stop because the last thing you want to do is be a black hole of chasing and chasing and chasing something, and then you're just you don't even know what you're running after anymore, right?
You don't even know what you're running after your career, right?
Yeah, so for me, I think right now I'm in a good place where it's really well balanced because I sprinted, I would say marathon for 10 years, but still, if I keep doing that in my 40s to 50s, you're
It's
gonna find me in a morgue somewhere. Like
yeah,
it's not gonna last and it won't
yeah.
be a success story anymore. It's gonna
But
be
you know, but you know,
yeah.
but you know, you attained that, and you know, you hit levels,
Mm.
and you even broke your own level. And I would see, you know, are you on all these, you know, trips abroad across the world? You know, you were the top performer, the top in Canada. And I remember you would go along with your wife on these trips, was just fantastic, so well deserved. But like you said, it catches up to you you know, at a
Oh, it
given point
definitely
in
does, yeah.
time. But look what
Yeah.
you've built, Louis. You have your own company right now,
Yeah.
and it's still an extension, right, of everything that you've built. But the balance, so how do you keep the balance in your life?
Well, I removed the importance of only the job. Like at
Yeah,
one point, I was like literally, obviously, if you're working 8 hours a week, it's almost an obsession at that point, right? Like
yes,
you got to tell yourself what's important. It's not the job for me anymore. Like if I
yeah,
look, we go to like my family. If my wife goes to church every Sunday, I go with her now.
yeah,
I believe I believe in Christ.
of
I
course.
believe in my children. I want to be as good as I can as a dad, right?
Yes,
I believe in my friendships, having a nice quiet time. I'm still friends with all the guys I grew up with, right? None of that changed for me, and I'm very proud of where I came from. By the way, from Shamadi, we all have we came from Greek families, hardworking families, struggled, to some
yes,
degree or
same
another,
here,
right?
same here. Yeah,
Yeah. So
from Cotinese.
yeah, there you go, Stella. So, I mean, at the end of the day, I remove the importance of work being number one because it cannot be number one. If
Yes,
it's just going to be a dead end road for you if
right.
that's all you're doing. Uh, because at the end of the day, it doesn't give you happiness after a certain point. It gives you a satisfaction to some degree, but
So you've
if you don't
added
have friends and
sports,
family and
sports to the equation,
sports,
music.
absolutely, of course, yeah.
So you play
Tennis,
the piano, you play the drums.
yeah. I play
Anything else?
music, yeah, that's right. Yeah. I'm actually a guitarist. So
And guitar as well. Oh my God, you can
that
like
was the end.
okay,
Actually,
don't say this to my
so the
husband
instrument that
because he has I think like 10 guitars downstairs. If he finds out that you
yeah,
play
he told
guitar,
me,
oh
told me,
my God.
yeah, yeah. No, the main instrument Stella was guitar. I was actually guitar. I don't play like the piano. I picked up during COVID again, and I
Wow.
played guitar for years. The piano I just got into it like the last 3 4 years. Drums I played during high school. Music came easy for me, like so
That's
one of those things where I obviously I worked hard at it, but I
okay.
was actually talented in that stuff.
Good for
So
you. Good for you, Louis.
yeah.
So Louis, look, it's been, I mean, an absolute pleasure to have you on the podcast, the Stellanides United podcast, a female empowerment podcast, but one again that I'd like to expand to include more and more men because actually you were one of the ones that said, what about us, the stelliness? What about us, the men, right? We want to be part of it too. And I said, you know what, Louis, you're going to be the first male that's going to be part of the Stellanides movement, whether it's the podcast, whether it's one of my events, but obviously, the podcast, you're going to reach thousands and millions of people. So, Louis, having said that, from the bottom of my heart, I wish you continued success. I wish you all the best for your family. Continue making us proud. You are a star, and you always will be. And for anyone looking for a mortgage, please, please, please reach out to Louis Vouloumanos from Montreal Mortgages at 1-514-823-8546. And he's a sponsor for this podcast. You're going to have his information before and after. And God bless you. Have yourself a wonderful evening. and looking forward to having you on a future podcast as well.
Thank you, Stella. It was really fun. I had a good time today.
Me too. It's always a good time when it's with Stella, right? There you go. But
For sure.
no. All joking aside, it's always a great time for me when I have such, humble and genuine guests that share, their passion and their contagious enthusiasm for life and for what they do. So thank you very much, Louis.
Thank you,
Big
Stella.
hearts, and have yourself a wonderful,
You.
wonderful evening.
You too.
Tilakya.
Yes.
Nasa kala. Bye-bye.
This episode is proudly sponsored by Mortgages Montreal. For all your mortgage needs, reach out to Louis Vouloumanos and his dedicated team. They're ready to provide expert guidance and help you make informed decisions.